Good morning, everybody. My name is Howard Burns. I'm the editor of NJBIZ. Welcome to our monthly panel session. This month, the topic is health insurance. And now I would like to introduce you to our moderator. Dave Mordo started his insurance career in 1980 as a sales representative with Metropolitan Life Insurance Company in his hometown of Brooklyn. In 2016, he was hired as Director of Compliance and Broker Education at Slattery GA, a division of Arthur J. Gallagher. In May, Slattery was acquired by Benefit Mall, where Dave is now a compliance specialist and director of the Benefit Mall School of Insurance. In his 38 years in the industry, Dave is focused on consulting with small and large employers on issues concerning health care and health insurance. His advocacy on behalf of employers has taken him to the halls of Albany, Trenton, and Washington, D.C., where he speaks with state and federal legislators and regulators. Dave teaches continuing education courses to brokers, does presentations to employer groups, conducts webinars, and writes a monthly newsletter and blog. He has been involved with the National Association of Health Underwriters since December 1999. He served the Monmouth Ocean chapter as legislative chair and chapter president. He also served as the New Jersey State Legislative Chair from 2007 to 2011. And he was on the organization's National Legislative Council from 2011 to 2017 and as national chairman in 2016. He currently serves on its governance committee. Ladies and gentlemen, Dave Mordo.
Good morning. So we're going to talk health insurance today and health care in New Jersey and America. We have a very, very distinguished panel to my right who will hopefully give you some answers and some good dialogue as far as what's happening and what will happen, what has happened, and all the good things in between. Before we get started with the questions, I would like each of the panelists, starting on my far right, to do a brief introduction of themselves for about a minute and a half, so you can get a better understanding of what they do in the healthcare and health insurance arena. So we'll start on all the way to my right with Veronica.
Sure. Thank you. Good morning, everyone. So happy you can be here today despite the terrible commute that I'm sure most of you went through today. I am Veronica Diaz, and I'm the manager of sales enablement over at AmeriHealth, New Jersey. Our organization has been dedicated to enhancing the health and well-being of the New Jersey residents for nearly 25 years now. My team, specifically the sales enablement team, wakes up every day and puts themselves in the shoes of the consumer and tries to figure out ways that we can simplify the very difficult and complex journey that it is in the healthcare industry. So we really take ideas and then we put those ideas into action. I'm really excited to be here today and to tell you a little bit about what we're doing to simplify that experience for our members.
Thanks, Brian. Hi, everyone. I'm Steve Herbst with Mazars. I appreciate you having us here today. I'm a partner in the healthcare practice in our firm. Mazars is an international audit, tax, and consulting firm. And in the healthcare space, we focus on payer and provider advisory services in the government and commercial sponsored healthcare industries. So that basically means we help everyone.
Thank you, Stephen. Good morning. I'm Carmilla Tan. I head up analytics for Brighton Health Plan Solutions. Our company is also called Create. I'm a healthcare actuary, and as they say, it's never a party without the actuaries. Or maybe the actuaries just say that. Okay, so self-awareness. But anyway, Create is a new health plan. Our clients are self-insured plans. We offer networks, third-party services, member services, provider services. Our health plans, our networks, are really less about open access and more about integrated delivery systems. So during annual enrollment, an employee would commit to, let's say, a Hackensack Meridian for all of their needs for their families, St. Clair, St. Peter's, Englewood Health. We're also adding a new network here in New Jersey, and happy to be here. Thank you.
Thank you, Carmilla. Good morning, everybody. My name is Chris Vanderwolk. I'm with Gente. I head up our strategy and business development, and what we do is we take care of all those acronyms that have to do with healthcare that complicate an employer's life, and we try to make them easy. So if it's HRA, FSA, HSA, ERISA, COBRA, HIPAA, ACA, and so on and so forth. We can help with that. And you don't need to know how to spell any of those. I can do that for you. Mm-hmm. Thanks for coming today.
Okay, thank you all. So this is going to be a very free-flowing discussion. My job is easy. I'm just going to toss out the questions to the panelists. They will answer or defer, and we will start with the fact that we just got done with midterm elections. And we saw that the House will flip come January of 2019. The Senate and the White House will stay the same. What do we expect to see as far as health insurance and health care in the new Congress? Is it going to be gridlock? Is anything going to be advanced as far as new legislation? What's going to happen with prescription drug prices? So what can we expect to see in the new administration come 2019? Anybody?
So I think it's safe to say that any effort to repeal and replace is gone. The House is certainly not going to pass anything that would repeal the Affordable Care Act. I think that there is room for common ground legislation to pass. I think that there's a lot of movement around what we've seen here locally in New Jersey on the national level with out-of-network bills and surprise billing. There's a lot of movement around that, and that's a nonpartisan issue. Everybody has constituents that go to the doctor. So there will be some movement there, but large-scale repeal and replace is dead. We will not see that at all in the next 2 years, in my opinion.
So just to piggyback off of that, I think what we may also continue to see is some potential for management by fiat, so to speak, where CMS can act independent of either the House or the Senate and try and push forward some changes, whether it be in the Medicare program or potentially how they fund states for Medicaid if they don't have to go through the Senate or the House. So I wouldn't be surprised if we see something to that effect, especially on pricing control when it comes to pharma and the likes.
Despite the uncertainty nationally, here in New Jersey, we're very fortunate that under Governor Murphy, they implemented the individual mandate, which will go into effect on January 1st, 2019, as well as the reinsurance program. So from a New Jersey perspective, we're very fortunate to be operating in this environment that has become more stable over the past couple of years. So despite the uncertainty that we're seeing across the country, we're very lucky to be in New Jersey where there are some of those new guidance that was put into play.
Yeah, and so I agree. I think healthcare is here to stay, especially as you think about large employers, even smaller, mid-sized employers. The need to attract and retain, top talent will continue. What will change possibly is, the many ways tools we have in order to control costs. Trend continues at 6 to 7% every year. There will be a focus on making possibly like the administration a little bit simpler and possibly ways to control costs. I'm happy to talk about that a little bit more later.
So let's talk a little bit about this individual mandate. As you may or may not know, come January 1, 2019, the federal mandate to have insurance doesn't go away, but the penalty has been reduced to zero. So anybody who didn't have insurance and chooses not to have insurance in 2019 will not be penalized for not having it. Governor Murphy instituted an individual mandate for residents of New Jersey starting in 2019. The question is, will this mandate encourage people to become insured? Does it hurt our population, either in the small group market or in the individual market, to get more people, whether they be young or old, whether they be healthy or ill, into the exchanges, either on the exchange or off the exchange? What role does the individual mandate have in 2019 in New Jersey?
So I can take this one first. So with the individual mandate being a federal rule for so long and it coming back into effect in New Jersey, we really don't expect it to play a major impact in terms of membership in New Jersey. So right now, our organization covers about 100,000 consumer members, and we expect that moving into next year, it's going to remain pretty flat. So we do think that people will continue to purchase insurance, and that's a good thing. We want to get as many people as we can enrolled in the marketplace throughout the state, because that helps us maintain affordability.
No one else? Okay. So we have a small group market. We have an individual market. There's been a lot of innovation, thankfully, around insurance and healthcare in the last year or two. We see new terminology like direct primary care, or bundling, or reference-based pricing, or value-based insurance design. These are brand new innovations that hopefully will catch fire because they offer a reasonable alternative as to how employers and employees and people in general can get reasonable health care, hopefully at affordable prices. Will these new innovations work well in New Jersey? Can New Jersey adapt to bundling or direct primary care, or all the new innovations that are out there to be had?
I'll take this if you don't mind. So I think it's a great idea, all of these shared savings programs. I'm not sure if everyone is aware, so certain things like bundling or direct to primary care, it's basically the provider saying, I'm going to set my price. It won't be fee for service. It'll be, one rate, and then it's like an all-in rate. And so the idea is a fantastic idea. When you look at all the trend surveys, they talk about where is the trend coming from for healthcare. And it's coming from price. It's not coming from utilization. So the path towards having the shared risk where the provider says, I'm aligned with you, right? I'm not going to just do more services to get paid more. I'm going to put my fees at risk. And if I get that right, then it's a good thing for both of us. I think that really is the key to control. It also keeps healthcare local. And so, when you think about keeping, most of your services within a community in New Jersey with certain integrated delivery systems, it's a great idea. So you don't have services that are traveling outside the state. They're all within the area. Healthcare is local, and I think this shared savings path is a good one.
So I'm going to give a classic consulting answer. Yes and no.
That's great.
So
Nicely done.
Conceptually speaking, we all agree that these models are absolutely what the marketplace providers and consumers need. It will result in better access to care, more timely delivery of care, as well as hopefully better patient outcomes. All right. The flip is you have consumers that have choice. Okay, so it depends on the market that we're also talking about, whether it's the commercial space, small group, whether it's the Medicaid space or the Medicare space. And then the successful engagement of a consumer to then say, oh, let me also be proactive in my self-management. Let me respond to a piece of mail that I get. Let me call my doctor's office back when they call me and say, hey, have you actively been taking your insulin, to manage your diabetes appropriately? And having that level of consumer engagement is the flip of these programs that are required in order to have a successful program and to have these kind of alternative payment models work. And without that, we're going to have, face problems, is long and short of it.
And just to piggyback on that, so beyond member engagement, which I'm sure we'll get to a little bit later in the panel, the ACA has really served as a catalyst for change in terms of how providers and payers are talking. So in the past, a couple years ago, the conversations were strictly just around price. Now we're seeing that providers and payers are really coming together to work together, to collaborate, to come together and figure out common goals to be able to impact the outcome of care. AmeriHealth New Jersey offers tiered products that we've worked closely with different providers and hospitals throughout the state. These plans work well for our consumer members, where 85% of the membership is enrolled in one of these plans. And they love these plans because they're able to visit providers in their local communities that are flagged as Tier 1. And when they go to these Tier 1 doctors, they pay lower copays and out-of-pocket costs. But they also have the ability to visit doctors throughout the entire state as well.
So let's talk a little bit about this member engagement. One of the new phenomena that I recently took advantage of was this whole concept of telemedicine and virtual doctor visits. I'm dealing with a herniated disc issue now. So 3 weeks ago, I decided to try telemedicine. And I called my doctor as I was writhing on the floor. And I said, what can I do? And, he gave me all his medical training and he said, get up off the floor first. And it actually was rather comforting. The whole idea that I was talking to a trained physician on the phone rather than getting up, trudging over to the emergency room or an urgent care center, but I did this on my own. I went to my phone, which I don't know how to work, and I was able to do it. And I think it's a wonderful thing. I think it's making a lot of headway. Is this just the fringe of how you and I as consumers are getting more engaged in how we are taking care of ourselves? And what is the industry doing to help us along so that we don't have to go out when there's 10 feet of snow, but get the care that we need? What's happening in New Jersey with that? Anybody?
So I can take this one. So we are heavily focused on consumer engagement and providing our members with the tools and resources that they need, telemedicine being one of them. We want to give folks the ability to access care when they need it. So prior to having telemedicine, somebody might wake up in the middle of the night with a fever and go to the emergency room, whereas now there's other alternatives that are cheaper to the member where they're paying less out of pocket, and they can use the mobile app or whatever it is that you're using to interface and communicate with your provider. So I think most of us here are really attached to our phones, and that's kind of the way that we like to interface with different people. So we're giving our members the ability to engage with whether it's their provider or their health insurance company in the way that they want to engage with. And most folks are choosing to do that through their mobile phone or through Skype. And it's just easier and it gives them access to care instantly.
I'll just add, though, telehealth is a great idea, right? The access and really your first stop shouldn't be the ER. That's like very, very expensive. But if you have to go, I'm not a medical provider. You should go and take care of yourself. But going back to that there is a fragmentation of healthcare, in America. And the concern is that if you start putting these point solutions in and nobody owns that, it doesn't go back to your integrated delivery system, it doesn't go back into your primary care provider, that fragmentation of services is a dangerous thing. It adds to the cost of the system. So I'm all for telemedicine, only because I also do like the convenience of having it on the phone. But on the back end, it needs to wrap back into, sort of your medical home, whether that's an integrated healthcare delivery system or your primary care, because someone needs to know what's going on with you. And, if all you're doing are, again, pieces and fragmentation of care, no one will see the full arc of what's going on with your healthcare.
So this conversation is great because basically we're circling around a point that I think we're all may agree with, is this concept of aligned incentives, right? That's really what we're talking about here, is how do you get, yourself as the consumer to have the same kind of, let's be honest, financial incentives as your primary care providers, your insurer, your employer, right? Because that's who's footing the bill in a lot of the times, to all say, okay, it's no longer just them paying the bill on my behalf and I can do whatever it is that I want. Fundamentally, the costs that you incur ultimately do come back to you. So if you are better and more proactive in self-management, in saying, oh, geez, should I have lifted that heavy box that throughout my disc, or should I have tried something different? It all kind of will culminate in this collective improvement to the system and ultimately to the bottom line and better outcomes and better patient care.
I think it was 2007 was the first time I saw any sort of telemedicine. I was watching a show, it was on Extreme RVs, and Simon Cowell had a trailer for American Idol where he had a corporate teleconferencing set up directly to his doctor's office with a glove that had an EKG in it. They explained that, and this was 2007, I'm pretty sure it was. Now we're at a point where you can go online and for $100, you can buy a Bluetooth EKG. And that, or you can go buy an Apple Watch that's got high definition heart rate monitoring inside it. That technology, combined with the ease and the penetration of mobile phones, I think is going to make a huge difference on the chronic users in terms of managing care. Beyond, I've got kids, beyond the pink eye telemedicine calls, which are a godsend, the chronic care, I think, is going to benefit the most by the cheap access to technology.
So one of the catchphrases and the new innovations that I mentioned before was something called reference-based pricing. Many providers, not only in New Jersey, but around the nation, are inherently unhappy with reimbursements that they get back from the insurance carrier. Sometimes they feel it's not enough. Sometimes they feel it's absolutely not enough. Sometimes they feel it affects my workload because now I have to see more patients, spend less time with them in order to make up for the payments that I am not getting. Reference-based pricing seems to offer a reasonable alternative to that for many providers. Is this something that you like? Is this something that can play well in the hospital systems and doctor systems in New Jersey?
So reference-based pricing, actually, the reference there is no network. You're basically told you are going to be paid a certain percentage of Medicare, and usually it's a very low percentage of Medicare. So I think the early discussions I've heard is that it's a mixed bag. There are some providers who have said, well, I'm not sure I can schedule your surgery if this is all I'm going to get paid. So I think if you are going to, consider going straight into like a reference-based pricing model, you need to go in it with wide open eyes, talk to your broker, talk to your advisor and say, just explain to me what the member experience is when you go in and you don't have little like AmeriHealth or Create or any logo that says you're in a network, because that could be a challenge.
Yeah, I'll agree with Carmilla. Part of the fundamental issue at play here isn't necessarily the concept of reference-based pricing. It's a larger issue of we actually just have a pricing problem for healthcare in America. That's the larger issue at play here. More or less, more carriers, more payers, more providers, everything stems off of basics of some point of the Medicare system in some way, shape, or form. So, that's Medicare Market Basket, that's MedPAC, there's a whole host of policy implications that drive the pricing system that exists in this country. And then you have the regional pricing that's going on. I don't know if anybody pays attention to what's going on in the news, but for instance, the New York Presbyterian system in New York City is having a major public fight with Empire over the pricing of its healthcare, and a large union is actually standing on the same side of the insurance company and pointing out at the hospital saying, you cost $25,000 more, $50,000 more on average for the same procedure as the same guy down the block. So again, I think it's a larger issue at play for pricing. I don't think there's one kind of magic silver bullet that's going to cure how we pay providers and incentivize them. It's a larger discussion at play here.
Depending on which statistic you believe, there are currently 150 to 180 million people covered under their employer's group health plan. The employer, since World War II, has been getting a deduction for their portion of the premium that they pay. This has obviously helped many employees. Many employers use the health benefits they provide to attract talent and keep that talent in their company. The millennials of today want student reimbursement for their loans. They want more PTO. They are young, they are invincible, they don't get hurt, they don't get sick. Health insurance is a concern, but it's not in the top 5. Is the employer-based model still safe? Do we want to continue to have employers offer coverage if it's affordable to them? Or do we want health insurance to just be portable to the employee, so if they leave or go from job to job to job, they can keep what they have? Is the employer-based model in trouble in this country and in New Jersey?
Well, I'll jump on this grenade.
So brave.
I think that the employer-based model is in severe jeopardy. Congress every year, somebody will float a proposal to take away the employer exclusion so that every dollar that goes towards providing health benefits would be taxed as income. People that are proponents of that say that that would drive employers to continue to do exactly what they're doing at a higher cost than just fund the government. I think we would see the opposite happen. I think employers would curtail coverage pretty quickly, and people would be dumped into the market without their plans. But unless we get pricing under control, we will reach a point where employers will no longer be able to afford it. You can only take so many double-digit increases before it stops making sense as an employer to offer that as a part of your benefits component. And so I think we need to have drastic structural changes to protect it, and it's not going to be just the tax code. It's going to be what we were talking about earlier with provider pricing. It's got to be addressed, or it will be unsustainable.
Just kind of piggybacking on that and the grenade and the challenges, the small group market has definitely been challenged, and we've seen that the small group market has actually shrunk by 65% since 2000 until current. There's a couple of components that are contributing to that, and it's just due to primarily there's been a couple of underwriting guidelines that have changed due to the Affordable Care Act. So, for example, there are some small groups. So if my husband and I owned a donut shop together, I love donuts. And before the Affordable Care Act, we were eligible to participate in the small group market and be covered under a small group plan. Under the new underwriting guidelines, as a result of the Affordable Care Act, we no longer qualify for small group coverage, and we would have had to dip into the individual market. In addition to that, there's been a change to the small group definition and how full-time equivalents are calculated. So some of those small groups have actually been pushed into the large group market. And then lastly, we do see some folks who are just moving into the level funded market. But we just caution folks that those plans don't necessarily cover all of the protections that a fully insured plan does cover. So those are some of the challenges that we're seeing, but we still cover hundreds of thousands of members that are covered through group plans. So it's definitely something that groups and that employers need to consider because it is valuable and it's essential for everyone.
So to continue along those lines, one of the greater burdens that the Affordable Care Act hoisted on the employer market was this new concept of employer reporting. Employers that had 50 or more full-time employees now had to spend endless amounts of time filling out forms reporting to the federal government as to whether or not they offered coverage, what type of coverage. Did it meet certain standards? It was a horrible burden for many, many employers. Have we seen this? Obviously, we've seen it in New Jersey, but what are the effects on the employer-based market that we need to protect of this employer reporting? Will employers just get to the point of being fed up with all the forms that they will just give up providing coverage the way they normally do just because of employer reporting?
So unfortunately, that wouldn't even be a good solution for them, because regardless of an offer or not, if you have 50 or more full-time equivalents on a control group basis, you have to report. That didn't change with the change of the individual mandate penalty to zero. None of the proposals that would expand or change any of the ACA would have gotten rid of that. So the employer reporting burden is significant and is going to continue on as long as individual subsidies exist. Reason being, it's the only mechanism to police who should or shouldn't be getting a subsidy in the large employer market. The three agencies, the tri-agencies, are the HHS, Health and Human Services, Department of Labor, and the IRS. They put out time estimates on these forms, and they say it'll take 12 minutes to fill out a 1095-C. If anybody's ever filled one of those out and you've tried to do it by hand, you would want to find the person who said it was 12 minutes and figure if they were just throwing random letters at it, because you can't fill them out that quickly by hand. It is a massive burden. There are a number of solutions out there. We have a great one. Some of those solutions cost more time than it would take to fill out those forms by hand. Others are quite simplified. But I don't think the burden's going anywhere. The individual subsidies are a huge expenditure every year. We were talking about billions of dollars that go out to pay for coverage that needs to be policed. And I know I was on the phone yesterday with an employer who got a letter, a 226J, for a penalty that they never thought would happen. They expected the election would come in 2016 and these would be washed away. My calendar says it's almost 2019, and this is still a thing. So I would not expect it to go anywhere.
So how about this for a solution? We've seen it in the news. I'll play the devil's advocate here. We've heard the term Medicare for all. Let's go to a single payer system already. Let's have the government be the payer of our health insurance and our health care. We'll have a couple of carriers out there to be the administrators, because the government doesn't do well when it comes to paperwork. Medicare for all is now making noise around the nation. Why can't we have Medicare for all in New Jersey? Let's just do it already. Relieve the burden on the employer. Give people the coverage that they need, because we know it's free. Anybody for Medicare for all?
I think we had a couple of show of hands. Everybody up here on the panel did. I'll try and
What's wrong
take
with
a
it?
swing at first.
Yeah.
I mean, well, okay, so Dave, you just gave a description of your design of what could be Medicare for all, okay? You have four people sitting up here, you're going to have four different thoughts, possibly, on what is a universal healthcare system, right? Alternatively, you could say, I want to go to Canada, or I will look at or the UK, or some other kind of markets where they do have, a universal healthcare system. And then you're going to have to turn your perspective, paradigm shift, and say, oh, geez, well, they have long wait lists of lines for procedures if you're only going to have two systems in play in the marketplace. And then who's going to hold the cards, right? How are we going to negotiate for pricing? So if I'm the holder of all the dollars, right, and you're one of the five systems, and I choose to say it's $5 a procedure code, and you want 12, I can say, well, I'm just not going to work with you, and I'll shift because I hold all the dollars, right? So again, there's no right way, there's no wrong way to say if this works, but until you really have an informed, nuanced, thought-out discussion as to how's it going to get paid for, by whom, who's going to have control, is it going to be a competitive bid design process every couple of years to then reframe, should this system work like this? I mean, it's great political talking point, right? But that's what gets somebody elected. That's not actually how we want to have our healthcare changed.
There are countries like Denmark and Norway that seem rather happy with their universal healthcare system. Is there anything that you see Congress doing in this new come January? Or do you see the states, what about New Jersey and New York, who are entertaining potential single-payer legislation? Does this become more of a hot topic in 2019 in Trenton?
So I'll read into this one again. Denmark, perfect example as a case study, right? Here's the fundamental difference. As I look out into this room versus if I was to stereotype it and look out into the marketplace that is Denmark. It's a homogeneous versus a heterogeneous mix of populations, ethnicities, and the like, right? So I'll give you an example. A few years ago, there was an outbreak of tuberculosis in a micro market in the Bronx. Okay? And what happened was there was an immigrant population that moved into that area, and they were making bathtub cheese. Okay? That's what they did back home. That was part of their culture. So that's what they brought here. And as a result, okay, you had this spike of tuberculosis, and you had some small population health crisis. Okay? Things like that stereotypically don't happen in a lot of the markets that we see universal health care in. So how do you translate that into the populace and the marketplace that is the United States of America, right? That is our open door melting pot that we want to have here. So you need to have a healthcare system that's built and designed that can accommodate everyone. And a homogeneous, one-size-fits-all approach to healthcare, I don't think works.
There's also the reality that a lot of those countries grew up around that type of system, whereas we grew up in a different model. We, due to changes in the tax code, have employer-based coverage. We have private insurance. Our private insurance is often, as Stephen referenced, based on the government programs in terms of how they pay. But we have, as we talked about earlier, we have a problem now with out-of-network doctors not accepting higher rates than what Medicare would pay. The AMA is one of the most powerful lobbies in the country, and to go to Medicare for All, you have to nationalize doctors for it to work. So you're going to have to go and tell doctors what they will accept if you expect it to work. It's not going to happen. It's just flat out, it's a non-starter in today's political climate. Stephen talked about a refined, nuanced conversation. Can anybody remember one of those in DC in recent years? We're not going to have it. It's a political talking point. Every time every state has explored it, it's been shot down. Colorado looked at doing it. They abandoned it. Vermont looked at doing it. They abandoned it. New York has looked at doing it, and the cost to do it, I believe the last estimate was 10 times their annual budget per year. So they'd have to scale up their taxes 10 times to do that. Nobody wants to pay 1,000% more taxes. It's just, today's day and age, I think it's a non-starter.
So, I mean, there's also something to be said that I know we're having the majority of our discussion points are on this commercial business employer marketplace. But if you flip your mindset a little bit and you look at the Medicaid marketplace in New Jersey, Medicaid is mandatory that you have to get, if you have Medicaid and you want benefits, you have to get it from a managed care plan. So you do have kind of a Medicare for All-esque program already, but then for that kind of environment, you do have major pricing and access issues. You'd have fundamental health systems that say, we don't want any new Medicaid patients. We're not going to accept $1. We're in the middle of doing a negotiation for somebody where they're saying state-funded benefits under Medicaid for our population's most needy, poor individuals in the state, we're not going to serve them unless you pay us 3 times what Medicare charges for a Medicaid population. So, again, we have something, but for what we do have, it's already getting priced out that nobody wants it.
So back in the early 2000s, New Jersey had 14 health insurance carriers that sold fully insured products. Today, we're down to about 4. Anybody care to weigh in on what the future will bring as far as the hope of maybe more competition in the state? Will more carriers decide to leave the state because they can't do well on their bottom line or not as well as they expected? Is the insurance carrier in trouble in this state?
So I'll weigh in. So CREATE is a self-insured plan. There is really a focus in terms of going insured, and if you're large enough, go self-insured. There's so many financial and philosophical reasons to go self-insured. There's also a very robust stop-loss market. So if you're worried about, you have one employee who's very sick, blowing the, claims for everyone, there's ways to protect around that. I think there's greater flexibility with self-insured plans, and I quite frankly don't think you're going to see more insured health plans. I think you'll see a continuation of self-insured options in New Jersey.
So as a health insurance carrier, our primary focus is affordability and market stability. AmeriHealth New Jersey has been participating on the exchange. It'll be our 6th consecutive year. So despite some of the insurers across the entire nation that have been leaving the market, we've truly been dedicated to participating on the federal exchange. In addition, as I mentioned earlier, I do think that we're in a very, very fortunate position here in New Jersey. On the onset of the ACA back in 2014, we did expect that there would be some fluctuation in the first couple of years, which I think we can all agree that we did see. Moving into the 6th year of the Affordable Care Act, though, we really have seen the market stabilize and flat out. So I do think that being in New Jersey has put us in a good position due to all of the new regulations and the individual mandate and the reinsurance program that Governor Murphy has implemented.
So let's stay on this idea of self-insured for a moment. It's a new concept to many smaller employers in this state. What's being done, if anything, to educate smaller employer groups about self-funding? A lot of people are hesitant to change. We like our plans. We understand that premiums are going up. We understand the burden on the employer because they may or may not be able to contribute more premium. This self-insured concept, is it having difficulty making its way into the smaller group market because employers don't quite understand it or don't want to change?
So I think in New Jersey, you need to have 50 eligible employees to qualify for stop loss, which is the basis for being self-insured. I think brokers are very, very well versed. We have a level funded product that works really well. And I think it's just a matter of, running some numbers with your brokers. What is the worst case scenario? And when I look at that worst case scenario, let me take a look at it versus fully insured. Is there still value? Does the return outweigh sort of the risk involved? I would take a look at all the numbers and also look at the future. Think about 3 years from now, 5 years from now. You want to provide solid benefits possibly to your employees at an affordable rate. Where will you be as a business 5 years from now? Are you going to grow? Are you going to shrink? What are your goals? And being self-insured just gives you more latitude than being fully insured if you have the size and risk tolerance.
Anybody else? So my next question is very simple. Do wellness plans work?
What do you mean by wellness plans?
I mean, I work for a large employer, and I smoke, and I'm 40 pounds overweight. And my employer comes up to me and says, if you stop smoking and stop eating poorly, we're going to give you a little bit of a discount on your premium contribution. And so I go into work and I enroll in this program to stop smoking and stop eating poorly. And there's is provided by the employer, and I go home and I open up a box of Yodels and I devour it. And my employer has no idea. As long as I've attempted this wellness program on site, I hear employers are giving discounts, even though I'm doing no good for myself. A lot of the medical questions being asked in wellness programs, employees are a little reluctant to answer. Certain things are private. Certain things employees don't want to tell employers. That's what I mean about wellness programs.
So, not to be smug, but I'm going to put it back at you, because your description, you just highlighted one of the flaws that as a marketplace, as a population, we struggle with, is that direct ownership of your own health vis-a-vis cost, right? I'm agnostic to what my healthcare costs. I pay my 10%, 20% copay, I have a deductible, and I'm washing my hands of it, right? Most employees think of their healthcare benefits. And so you're really part of the root cause then, what you're trying to drive to, is figuring out a way to have adequate employee engagement to then have them understand that eating that box of Yodels is going to cost the firm X because you're more prone to keel over from a heart attack. And as a result, our costs go up and you're going to be the driver of the cost. So the wellness programs have to have adequate teeth. But how do you financially penalize a person for, genetic disposition to eating Yodels? That's a different discussion.
So I can't speak necessarily to the employee wellness programs, but I can speak to the wellness programs that are offered by our organization. So as an organization that is dedicated to improving the wellness of our members, we do offer a wellness program to all of our members that we do encourage them to take advantage of. So in the past, your health insurance company really was just there to pay claims and send you your monthly invoice, collect payment, and then send you a renewal at the end of the year. And you really didn't hear much from us aside from that. But looking now, years later, as I mentioned earlier, the ACA really has served as a catalyst for change. So we're really engaging with our members on a completely different level. We're nurturing the relationship with them throughout the year. So we have regular touch points with them on a monthly basis. 70% of our consumer membership is actually digitally engaged with us, where that then gives us the ability to send them messages about wellness, whether it's, encouraging them to enroll in our wellness program or advising them that they're due for some sort of a wellness visit. We also send reminders on preventive mammograms and colonoscopies. So I think the engagement with the carrier and the member has really changed and centered around wellness, because most folks just tend to think about their insurance when they really need it, and then when they do need it, they really, really need it. So we're really just trying to get out ahead of it and getting in touch with our members throughout the year and just really working on empowering them and giving them the tools that they need to be able to take ownership of their wellness.
And I'll just add, if you think about it, the ultimate source of your ultimate wellness coach is actually not a point solution. It's not a nurse. The ultimate wellness coach is your primary care physician. So we believe really your best relationship is with your provider, who can tell you, you have to stop eating the box of Yodels. You have to stop smoking. Why? It's for your health. It's different when you get a call in the middle of dinner saying, I am a nurse from whatever. It's different than your doctor looking at you saying, I'm really worried about you. You have to stop buying the Yodels.
You want to go buy a box of Yodels?
They're very good.
Are they?
HSAs and HRAs. These were and are funding mechanisms where you can put money away or have money funded to you to help to pay for some outstanding medical expenses. There seems to be a new theory around the nation that HSAs are useless. The high deductible health plan has such a high deductible that the average American can't afford and doesn't have enough money in savings to handle that high deductible if, God forbid, they have an unexpected expense. And there's never enough money in the HSA or HRA accounts to offset that expense. That seems to be a growing. However, on the flip side, there are some that say these things are more wildly popular than ever before, that people like them, that people use them. Is there a continued uptick in the popularity of HRAs and HSAs in New Jersey? Anybody seeing?
So we administer HRAs and HSAs. So maybe we're biased, but 100% of our clients seem to have them. So that's helpful. We are seeing actual expansion into health reimbursement arrangements and health savings accounts. Some level setting. An HRA or health reimbursement arrangement is employer money to pay for expenses under your medical plan or otherwise. An HSA is an individual bank account that is a triple tax advantage. The money goes in tax-free from any source. The money is able to grow tax-free. If you spend it on medical expenses, you can spend it tax-free. And if you don't spend it before retirement, you can take it out as regular income or spend it later. HRAs work with any plan. HSAs have to go with a high deductible health plan. We're seeing a lot of both still. HSAs are starting to become more popular because of just the cost. HRAs require employer money. They are hugely powerful because health insurance plans do have high deductibles. And the reality is wages are still pretty stagnant in the United States. So when you have an ever-escalating deductible, if you've got a deductible of $6,000 and you're making $40,000, you're never going to have that deductible. You don't have the dollars. So employers coming up with that is a great way for them to save on their ongoing costs. It's a partial, very small level of self-funding. They're taking on the first dollar risk. We're seeing a lot of it grow. The HSAs are an incredible tool if you are financially savvy. If you are maxing out your 401k, there's no better vehicle than an HSA. But if you are not, it can be hard for people to come up with the money. So we are seeing a lot of HRAs because employers still do care about their employees' financial well-being.
So I have to agree with Chris. HSAs are definitely becoming extremely popular. So in our small group market, nearly 50% of our members are enrolled in an HSA plan, and we offer a very robust portfolio of HSA products that folks can choose from. I do want to caution, as Chris mentioned, though, these plans aren't for everyone. So you do want to consider the price that you pay monthly versus the price to use your plan. So while those monthly premiums may seem affordable, you could be stuck at you could be stuck with a higher out-of-pocket cost at the point of service, and that might actually cancel out those low monthly premiums. So you do want to be cautious about that and consider those two factors.
So a couple of months back, we saw a news headline that Jeff Bezos, the founder of Amazon, and Warren Buffett, the chairman of Berkshire Hathaway, and Jamie Dimon from, I believe, JP Morgan, put their heads together and decided that they are going to solve the healthcare problem in America. Fast forward to today, they've hired 2 people, I think, and that's all we know about their plans to fix healthcare in America. Question is, what are they up to?
So I'll just jump in as the actuary. I think they're looking at their data. Like if I were them, I would say before I make my first move, I'm going to understand what is the data. There's so much data underneath the 3 companies for healthcare that's a likely place to start. And then one day we're just going to get an announcement and boom, we're off to the races. That's my thought.
So, I mean, I'm naturally a cynic. So I will say, one, I don't think they're so magnanimous that they're trying to fix healthcare in America. I think they have 3 wildly successful and profitable companies, and they're trying to figure out a strategy to make their 3 businesses that much more profitable, right? It's for them. Now, I was actually yesterday having a discussion about the impending Amazon takeover of Long Island City, in, up a little. And we were talking about our what's Amazon's role? They're going to potentially have a PBM now, right? That's the whole position, the defensive strategy between CVS and Walgreens having their merger. So the point here, let's say we have 25,000 new employees and the Amazon brand moving into a marketplace. Do 25,000 employees actually mean anything to a health system that services hundreds of thousands, if not millions of patients a year? And the answer is no. So unless they have tremendous leverage and negotiating power and can come up with maybe an integrated design, a la Create or something like that, I don't know what they've got going on.
So CVS now owns Aetna. Cigna will very soon own Express Scripts. Hospital systems are merging. Older doctor practices are selling to hospitals, and the docs are going to work as hospitalists, working Monday through Friday, 9 to 5. They come in, they go home. Are these mergers of corporations with now minute clinics where you can have a triple bypass in aisle 6? Are these mergers, are these consolidations going to help residents in New Jersey?
I mean, I'm not a New Jersey resident, but I honestly believe the answer is no. Look at the Pittsburgh marketplace, right? You have UPMC and then you have Fairmark. You have these two major health systems, insurers, and they've been slugging it out back and forth where one was an insurer that bought hospitals, and then you had a hospital system that started an insurance company. And they've literally drawn a divisive red line, like this side of the room goes that way, this side of the room goes that way. You're not allowed to cross boundaries in terms of you have to pick your health system, and then you get your insurer, and then you get your hospitals, and they don't do business with one another. And that's negatively impacting patient care. Now, you can say, but if I'm in my own kind of circle, in my own bubble, I have great access and better pricing. But it's that kind of classic give and take of, do I want broader access, or do I want, a very tightly controlled network and I get a premium price? But my personal opinion is no.
Okay, so this concludes the dialogue up here on the panel. What we want to do, in fairness, is open up the discussion to you folks in the audience, and we'll do a question and answer for any members of the panel. The microphones are coming around, so feel free. State your name and your question.
My name is Andrew Dars from IUTNJ, independent broker.
Can't hear you.
Hello. Okay, my name is Andrew Dars. I am an independent broker, IUTNJ. And I guess my question really is, this is the time of entrepreneurs, innovators coming out. In the past, when most of us got into this, you're right, we did have like a dozen plus carriers. You had companies like run by Len Abramson and Steve Wiggins that found an advantage to come into this area and open up new companies, new healthcare companies. You got 4. It seems like they've locked the door. They can do whatever they want. No one's going to challenge them. So they take away the husband and wife status. They take away participation issues. They make that harder for these people to have insurance. So they say they want to do all these things, but what can be done, what incentives can be made to have people start up new companies? I mean, this is the time where entrepreneurs are popping up and falling up trees. I mean, they're coming up with everything. So why is that not happening? Why are people not starting new companies and creating competition? Competition creates better rates and better service.
So I feel like that's a lead-in for me, just because I'm called Create. So the company is called Create. I mean, we are, in a way, a startup. So we are, our value proposition is we're less about wide open access, and we are a marketplace of integrated delivery systems. And so, for us, we said going in, we know it's going to be hard. We're going to try something new. It's been done before in Minnesota. But instead of electing, wide open access plan for your medical plan, you're going to pick one system. And going back to, earlier, in a way, because of all this consolidation, having one system, let's say it's Hackensack Meridian, that you commit to, you're not traveling into the city for certain things or into Philadelphia for other things, keeping it in New Jersey is a good thing. And we, at least in Create, we're going to start, moving towards the state and covering most of the state over the next couple of years. We are committed to try this sort of new way to deliver healthcare services, and we have an excellent price point. So you mentioned your broker. We should talk after this because we might be able to do business. Thank you.
Any other questions? In the back.
Oh, hi, this is Sue Padelker. I'm just a resident, New Jersey, small business person, and my question is kind of similar, so I'll just try and finish this topic here. So, are we creating a country of salaried employees and not small business people? Now, my husband and I, self-employed, professionals, we have to go to the individual mandate, and it's like $18,000 a year just to pay premiums. And, we've tried all the plans. This is an open enrollment. So am I missing something here and not able to get the advantages of a better pricing? Then, am I missing something? Or are we just a country that doesn't want entrepreneurs and, you just have to go get a job? Premiums are so high. It's insane. I mean, $18,000 just on premiums. And then on top, you're paying $5,000 for your, for the deductible piece, or $4,000. That's a huge amount of money before you even start using that plan. So maybe I'm missing something. And we've tried, AmeriHealth type plans, this thing where you're talking about going into a network, going into, one system, integrated system and all that, but they're still too high. Thanks.
Anybody?
So I totally feel your pain because my parents also, they don't qualify for coverage through their employer. My dad owned a restaurant his whole life, so he had to dip into the individual market, and the premiums can be pretty exorbitant. As I mentioned earlier, though, we're starting to see the market stabilize, and because of all of the regulations that have been put into play moving into next year, AmeriHealth New Jersey has actually been able to give a 14% decrease moving into next year. So I think it's a step in the right direction, and we're starting to see that the market's starting to finally stabilize. So I do encourage you it's open enrollment now, so I encourage you to do some shopping. And I think that due to the two new regulations that we spoke about today, you should be able to see some plans that may be more affordable due to all of the factors that are being put into play to kind of stabilize the market, at least here in New Jersey.
And I'll just add, I think aside from the individual coverage, if you are in a business, it's a smaller business, there is a self-insured MIWA, it's an association that you might want to consider. So I'm happy to give you some more information, but it's basically, smaller companies that have banded together and said, we're going to purchase insurance on a self-insured basis, makes it more flexible at really great price points. So I'll give you my card too, and we can talk about that.
Anybody else? Yes.
Good morning, Sarah Andrea of On Track Solutions. This is questions for Ms. Diaz. Can you speak to consumer transformation through technology engagement?
Absolutely. So if we look back before the ACA, we really weren't doing much in terms of consumer engagement with our members. So as I mentioned earlier, you really weren't hearing from us. You'd get your monthly invoice, you'd pay your invoice, and then upon renewal, you would receive a paper renewal. If you fast forward now to 2017 and 2018, a couple years later, we're really engaging with our members regularly. Upon renewal, they're not only just getting a paper renewal anymore, we're actually text messaging our members and making it easy for them to renew for us, because we do understand that that's a very difficult and complex process. In addition to that, we're arming our members with all the tools that they need so that they can make informed decisions. So earlier this year, we rolled out our care cost estimator tool. So with high deductible health plans becoming so common now, and the price of any service is typically unknown until you're at the doctor's office, we're providing this tool that gives folks estimates across a number of providers based on real claims data, and it actually also takes your benefit information into account. So if you have a broken leg and need to get surgery for some sort of a service, you can actually look online and figure out what that's going to cost you out of pocket. Not only that, but for things like MRI, a lot of times we're not sure where we should go. So should we receive that service in a hospital or maybe at an outpatient facility? That cost care estimator tool can also give you price estimates based around what's more effective and more efficient for you in terms of cost of where you should be going for those types of procedures.
Good morning. My name is Gary Bender. I'm a owner of a small engineering company in New Jersey. We have 50 union employees and 17 office staff. So we were hammered. I bought the company 5 years ago. So the gray hair started about then. Okay. And I went through 3 years of Groundhog Day with renewals in New Jersey. And by the way, I got the worst of both worlds. I live in Pennsylvania and own a business in New Jersey, so there's no escape. But the bottom line is, and Camilla, I appreciate your comment. I was introduced to self-funding 2.5 years ago. And we eliminated our employee deductibles, reduced our premiums 30% in 2 years, and our employee morale has gone through the roof, and it's the world's greatest recruiting tool. Only because I hired an independent advisor to work and help me through the maze. You should ask for money. Okay. So my point is, self-insurance reduced our costs 30%, but now I eliminated all my recruiting costs, all my ads, I'm growing, and been a great recruiting tool. So my employees have, their maximum out-of-pocket for a family is $1,150 a year. It can be done. But the traditional brokers gave me the same song and dance November 1st for a December 31 renewal, and I finally got fed up with it. So it can be done. So thanks for the self-insurance, because I think 70% of the companies are fully insured, and probably half of them shouldn't be. There's a fully insured place in this world for certain situations. The question I have, and it goes back to that lady's question, a year ago, an executive order was passed by Mr. Trump to allow interstate purchasing. And we all understood that has some value for a guy like me that's in 2 or 3 states. Okay? The quiet one was he approved coalition plans, which allowed small companies to join effectively a captive, but not a captive, okay? So why in the hell is New Jersey one of the 3 states in the country that did not allow coalition plans to be put in place? Which politician, which lobbyist controlled the insurance commissioner? Because by the way, Pennsylvania was the second one. And oh, by the way, New York was the third one. So my crews work in New York, my business in New Jersey, and I live in Pennsylvania. So if you think I'm aggravated at some politicians and lobbyists, I want their names.
No, I think unfortunately, you're 100% right. It's a great strategy, but your hands are tied, and I can't give you any names.
You can start just about anywhere and try.
So I will attempt to give the answer. So the culprit, obviously, in the state is the Murphy administration, and he appointed a Department of Banking and Insurance commissioner. New Jersey has been habitually a highly regulated state, and the answer is that the association health plan or the coalition health plan, if it doesn't comply with the health insurance mandates set forth by the department all the way back to 1994, the commissioner has said, don't bring your product into my state because it has to comply. You are right. Pennsylvania, New York, and 9 other states have filed a federal lawsuit to prevent these across the state coalitions from coming into the state because they feel that the coverage offered is not up to the standard that New York, New Jersey, and Pennsylvania currently have in place. That's the political answer.
How does your organization call for public hearing in the vaccine? Because, yes, the plans can be modified. She's smiling. The plans can be modified to meet whatever Trump wants.
Yes. And we are happily, I can report to you, that we have spoken to the commissioner, and we will have a meeting with them in January to discuss this type of situation whereby association health plans or coalition plans, if the object is to ensure people with reasonable, comprehensive, affordable care, let's do it. Any other questions?
Anthony Vecchione, NJBIZ. On the single payer topic, Chris, you said a little while ago that it's a non-starter. A few weeks ago, I was at a conference where the CEO of a major health insurer, and I mean one of the big three, he had a different take. He said that, without going into a lot of detail, he said that if we don't get this price thing under control, we're gonna see single payer in this country. And he was talking about the Affordable Care Act, which he said is not working. He said he was very concerned about the millions of people that are uninsured, and he said unless we do something, this current system is unsustainable. The panel's feedback. Why would he say that?
I actually would agree with that. So I tried to put a point on it that I think it's a non-starter right now, but the employer market is unsustainable or on a path to unsustainability, and we will, I think, reach a tipping point where the people will demand a single-payer system because they will be tired of looking at more than 10% of their income as their deductible. But the reality is that the math doesn't work right now, and the politics doesn't work right now. It would have to be, in our current environment, you'd be looking at one party pushing this through. That's a non-starter today. The entire country is not Alexandria Ocasio-Cortez. She wouldn't have won in a lot of the places where Democrats picked up seats in November. So the math isn't there, the politics aren't there, because the demand isn't there. If the demand becomes there, well, we might see it. We've got large, overarching social programs that have been around for a long time. But I don't think in 2019 it's going to be the ticket. 2029 could be a totally different story. And I think if you're planning the long term, it's an absolute threat, but it's not going to happen in the next 2 years.
I'll just add, right, going back to sort of the math of cost increases, 7% trend every year on your second largest sort of line item for HR, right, after wages, is unsustainable. If you are a business, your revenue is not a guaranteed 7%, and that's even on the average side. So there's some that are 10, 15, 20%. So something needs to change. And, I think the sort of large employer market, you mentioned Amazon, Berkshire Hathaway, JP Morgan Chase, basically saying healthcare is broken and we need to do something means people are going to start, making some bets. So on Create, we are an innovative new product. When you think about open access, we are like the opposite of that. We're basically saying, stick to one integrated delivery system for yourself and your family at better rates. And that is sort of like a bet we're taking. Integrated delivery system trumps, fragmented care. People are going to start making some bold moves. Employers are going to try new, different things in order to control that unsustainable healthcare trend.
I think there's one other aspect to this discussion when you talk about the concept of single payer. And that's if you took myself, any person in the room, any employee, and you say, what's the total amount of money that you as an individual and your employer spend on your health care? And then if you were to say, I'm going to give you back every single dollar of that, but then I'm going to pull X% of it away in the form of a tax. Okay? So if we, as socialized medicine does in other parts of the world. So if we were to shift it and look at it that way, what would be the net cost to a consumer? And how much higher would that be? How much less money would everyone have in their pockets as a result of something like that? And then if we were to start kind of shifting our mind's eye and thinking of it that way, I think some of these increases, while they are a lot and they're difficult and my costs go up every year, but I think they're still going to come out less than if you were to look at it that way.
We have time for 2 more questions.
Good morning. Dave, great job moderating today. Just a couple of quick things. My name is Paul Smith, and I'm with a company called Benefit Smiths, and I've been in the industry for about 22 years talking to employers about their health care. Small employers, mid-sized employers, large employers. You know, we're talking about a marketplace where the 2 to 5 life group is typically running about 140% loss ratio for the large employers, for the healthcare carriers. There's some interesting programs going on for employers out there that are actually using level-funded and self-insured plans to do some different type of options for their employees, much like this gentleman did with his company. So you don't have to stay with the fully insured carriers. However, the more people that do leave the marketplace for level-funded and fully insured programs is going to deteriorate the market for those fully insured carriers. So that's a battle that is going to be faced, right, Steve? You know, so that's a battle that you folks are going to be facing, and what's that going to lead to but higher costs for employers at the end of the day. What I talk to employers about is basically taking a look at your healthcare cost, your healthcare expenses, typically as an own business within your own business. If you take a look at it and manage it that way, that's the best way that you're going to be able to handle your costs. Thank you very much. You guys are doing a great job.
One last question. Yes, sir.
Hi, Phil Doyle, 24/7 Networking Sales. I don't mean to aggravate all the lawyers that are in the room, but I haven't heard one comment about trying to do something to control the legal cost of being in the medical world. There are so many fraudulent lawsuits. I was on a jury in Morris County, and the guy claimed he was injured 2.5 days. We definitely found the guy not guilty. So, you know, if there's a way to control that cost, it's probably the single biggest component towards health insurance, because doctors have to cover their malpractice. Hospitals have to cover their malpractice. And there's just rampant fraud in that whole situation.
So the cost of malpractice and tort, the big driver is actually in defensive medicine. It's doctors performing unnecessary tests to cover their checklist. That's the word I was looking for. And so I had an example. Somebody in my world had a nail bed nicked at a nail salon and got blood poisoning. I was able to look at it and identify it as blood poisoning. You can see it running right up the vein. Went to the hospital. Doctor said, you need to get an x-ray of your hand. No idea why. This person had a $10 copay plan on the state health benefits plan, so didn't bother to ask, why am I getting an x-ray? Why are you exposing me to radiation? But the doctor was making sure that they didn't miss something, because if they ended up in front of a jury, they had to be able to say, well, I did everything that I would have reasonably been expected to do, what a prudent expert would do. So it's the defensive medicine. And how do we address that? You can have tort reform, but states that have done tort reform haven't seen massive scale reductions in cost. I think what our carrier partners are doing is going to help with integrated delivery, because they can work with doctors and manage what's actually being delivered, so that when somebody comes in for blood poisoning, you think twice about giving them an x-ray when it's clearly identifiable what it is.
So we're going to wrap up now. What I want to do is offer our panelists 1 minute to make a final statement, if they want to, as to healthcare and health insurance. And we'll start on my far right. Any closing comment you'd like to make?
Thanks. Thank you for having me here today, and thanks for your time. If I can leave you with one thing when you leave the room today, it's that healthcare payers are really evolving The Affordable Care Act has served as a catalyst for change for us. It's been a tipping point. We're engaging with our consumers in a way that we never thought was possible 5 or 6 years ago. And that I think is just the beginning of the path. So I do thank you for your time today, and have a great Thanksgiving. And I'm also very happy to be a part of an organization that is so focused on simplifying the experience for our consumer members.
Thank you. Steve?
So, Dave, thank you for some insightful and challenging questions today. I appreciate the invitation to come here today. And really the only takeaway I'd love for everybody to have is that change is here and continuous in the larger healthcare system. And it will continue to evolve.
So thank you, everyone, for listening. CRATE is a marketplace of integrated delivery systems. We're new to the market. We're continuing to grow in New Jersey. If your broker is interested, test out self-insured plans. Just take a look at the numbers. We have great price points. And the concept is really not so foreign. It's healthcare is local, and commit to one system. That way all your records are somewhere, and there's one group that's really managing, quarterbacking your healthcare needs. Thank you.
Chris?
Thanks, everybody, for coming out this morning. I hope you got something out of it. This world is ever-changing. It's complex, and there's a lot to understand, but there is also a lot of opportunity in that. There are a lot of ways to be creative and help with your employers and your employee clients. So finding a good partner who can help you with navigating that is going to be critical. There's a lot of misinformation out there. Don't trust Google. If you go to your doctor, they would tell you not to trust WebMD. Don't trust Google. The people who are best at search engine optimization are not necessarily the best at compliance. And so for that, find a good partner. Thank you.
And thanks to all of you. At this point, I want to turn it back to Howard, and have a good day.
I would just like to say, echo that comment. Don't trust Google, trust NJBIZ. We'll be right there with all of your insurance coverage and health care coverage. Anyway, I want to thank the panel this morning for your wonderful job. Can we have a round of applause for the panel? And I also want to echo the audience member who pointed out what a great job Dave did moderating this morning. So thank you, Dave, very much. Coverage of today's panel will be on njbiz.com this afternoon, so please look for that. It'll also be in the October 10th issue of the newspaper. You know, I've been doing that all week. December 10th. Ask Ken. I've been doing that all week. And so it'll be in the December 10th issue of the paper. And if you're not familiar with the paper and you want to try it for free and sample it, we can sign you up on your way out for a free subscription. The lovely Penelope is over there, and she'll take care of you. I just want to wish everybody a happy Thanksgiving. Thank you. I want to wish everybody a happy Thanksgiving. We'll be doing another panel next month. And please join us. And thank you very much, and have a great day.